Okay, our next presenter, David Kedmey from EidoSearch. And they've developed a new generation search engine for large amounts of sequential data. The technology was based on an advanced research by co-founder Stephen Zhang at Ryerson University in Toronto. David?
Hi, my name is David Kedmey. I'm the president and co-founder of EidoSearch. EidoSearch makes deep financial research easy through a technology called content-based search. The benefit is it saves you time. You can test many more ideas using this technology. It also helps you to discover. We reveal hidden relationships in the data. Search is about discovery. Those two elements lead to a trading edge. Okay, so content-based search is best explained by way of example. Take the VIX. Volatility has been declining for the last 11 months. Without formulaically describing that curve, without having a model in mind, you can use that data itself, that pattern, as your search query directly to look from the beginning of the VIX trading history to today and find all those times in the past when we had similar declining volatility. That way, in 2 clicks, you can answer important questions like what tends to happen next. Well, I ran the search. On average, in the next 3 months, you can expect volatility to be up by 30%. Now, that's important information that a portfolio manager can use to decide, should I be more risk on or risk off? You know, this interaction is analogous to Pandora Radio. I like the Rolling Stones. So you go to Pandora, you type in the name of the band, and without articulating what I like about the music, Pandora automatically retrieves similar bands, you know, Led Zeppelin, Jimi Hendrix. So how is it that Pandora can do this with so little input from me? The way they do it is they have what they call a music genome, you know, comprised of hundreds of elements that get at the essence of music. That's what allows for this automatic retrieval. Now, we have our own genome. It's not a music genome, it's a signal genome, which is comprised of thousands of signal features that get at the essence of time series data, things like the roughness or the smoothness of the curve. That way, you can take an ambiguous query, you know, find me something like X, search over a large database, and in seconds, retrieve accurate, actionable results. You know, so we're going after mutual funds, hedge funds, and investment banks. Fidelity is on the cutting edge. They're one of our customers. FXCM, one of the largest currency brokers in the world, is a customer. You know, why are we interested in these institutions? Well, at each firm, they spend tens of millions of dollars on data and analytic tools to support an army of quants, IT, traders, who spend tens of thousands of hours pursuing endless trade ideas. You know, it's not the number of ideas that is the limitation. It's the amount of data that people grapple with and the inadequacy of the tools that form a bottleneck. That's a bottleneck that we solve. And let me show you how. So here's how people do things today. It's coding, it's cumbersome. This is a simple idea made complex by the tools at our disposal, so I'll translate it for you. And when Microsoft is up a lot in a day, relative to the last 1 month, what tends to happen in the next 1 month? So you can code, or you can use EidoSearch. Here's the price of Microsoft. I'm zooming into a section, flat, and then rising. That's your query. It's the data. Click search, and we scan through the history of Microsoft and every other stock in the relevant universe, and in seconds, retrieve related patterns. Here's a ranked list of results throughout history where you had similar price behavior. One more click to back. Here's the table of results in chart form, you know, flat and then rising. Another click, and you've got your answer. You know, 1 month after this sort of price behavior in this set of stocks, you've got a 2.5% above market return. It's immediate quantitative results without coding. It's information that a trader can use to trade with more confidence, that a research analyst can use to put some data, some quantitative data behind a buy-sell recommendation. It's a capability that a quant can use to run hundreds or thousands of queries on new signals and test many more models than they could have tested previously. So here's another example. Asset allocation. Say you want a basket of stocks, all trading sensitive to crude. Okay, you can go about it in the traditional way and start with the usual suspects, Exxon, BP, or you can let the data tell you, let the data do the work for you. Take the price of crude, search around 100,000 stocks around the world, and come up with that ranked list of results. Okay, some of these you would have anticipated. Others are news to you. So search is about discovery. That's what gives you the edge. Last example, macroeconomics. You know, here are 3 factors that are important drivers in the market today. You got crude, the Treasury, Euro-US exchange rate. This is multi-factor search. Take all 3 patterns, search throughout history. Once you have those similar environments in the past, you can see how did sectors perform after those similar periods. This is for sector rotation. So, you know, the simplicity of this interaction, it belies the complexity of what's going on underneath. It's computationally intense to take an ambiguous query. You know, find me something like X. Search over a large database, and in seconds, retrieve accurate results. So how is it that we're able to do this? It's because of my partner, Dr. Xiaoping Stephen Zhang, sitting at the back of the table in the blue shirt. Stephen and I met at the University of Chicago booth. We were doing an MBA together. Stephen's had a whole career applying content-based search in industry and academia for the Human Genome Project, for neuroscientists looking at patterns in EEG brain activity. And when we got to Booth, what we realized is these techniques are ideally suited for financial data. And that's the company we set out to build. After graduating, Stephen went back to his university, Ryerson University. We received substantial commercialization grant funding and assembled a team. That team built the prototype. And when the prototype reached a point where it was time to show it to the street, I left my job at Oppenheimer. And here's what we found. There's great demand for this capability. Fidelity is doing things with this technology we didn't anticipate. That's what's exciting about a new technology. FXEM has made unbelievable calls identifying turning points in currency pairs. And we're an important part of that process. The pipeline is strong. Mutual funds, hedge funds. Thanks to the FinTech program, the investment banks are in the mix. And the FinTech program has been hugely beneficial to us for 2 reasons. It's the advisors and the mentorship from the banks. What our advisors helped us to do is really clearly define the 2 pillars of our business. There are 2 customer segments. You know, you've got people doing idea exploration, you know, the one-off idea like the VIX. Researchers, portfolio managers, that's idea exploration. Every day the drivers in the market can be changing. You need a quick way to explore quantitatively. Then you have systematic testing, you know, the quants, where they don't need that graphical user interface. They just want to harness the power of the search engine to run thousands of queries, you know, and test many more signals than they would have previously and discover. So those are the 2 pillars. And that's the framework that we've used in our discussions with the bank. Credit Suisse is a great example. At Credit Suisse, there are, of course, many business units, broad applications of search that we're exploring, looking for implementations. And we found a number of promising areas, but they all fit into these 2 main buckets. The other thing we've learned is there are both internal uses and external uses. So internally, we can assist with research, with portfolio personnel, portfolio management personnel at the trading desk. But then those same functions can be delivered to the clients of Credit Suisse, clients that we may share. While the FinTech program formally ends today, we've never been busier. If you could see my calendar next week, there's a lot going on. So it's been a huge accelerant. Let me sum up this way. So there's a cycle of analysis when you're using data. And in today's world, with today's tool, it's really about refinement. So you pick a starting point, you have your model already formed, and then you optimize from that point. The problem is, what if you're at the wrong starting point? You might miss the best solution. It may lie outside of that path. With content-based search, you can explore many alternative starting points efficiently, quickly. That way you get to the best solution. From there, optimize and refine. So search is about speed. It's about discovery. It allows for real idea exploration. And that's what we do, and that's what leads to a real trading edge. Thank you.